E-Trade custodial accounts are managed under UTMA, UGMA laws, allowing parents or guardians to invest on behalf of a minor. These accounts are designed for the minor's future needs, such as education or general savings. The custodian manages the account with fiduciary responsibility until the child reaches the age of majority. At that point, ownership transfers to the child. Since E-Trade is now part of Morgan Stanley, account transfers can be initiated through their app or website. We will describe the specific steps for transferring the account. The age of majority dictates when the child gains control of the custodial account. It varies by state, typically 18 to 21 years old. For example, it's 18 in California and New York, but 21 in Alabama and Mississippi. Here are the population age distributions for Alabama and Mississippi, where the age of majority is 21. E-Trade uses the account's original state law to determine this age, regardless of later relocation, unless updated. The account transfer cannot proceed until this age is reached. Once the child reaches the age of majority, which varies by state from 18 to 21 years, the custodian can initiate the transfer process. The custodian contacts E-Trade to start the transfer. This can be done conveniently through phone, live chat, or the online portal. Next, provide documentation to confirm the child's age and identity. This includes birth certificates, proof of identity, and now often biometric verification for remote transfers. E-Trade then reviews the account for compliance with state laws, potential taxes, and any restrictions that might apply. Finally, the transfer is executed. Funds and assets are moved to a new adult account in the child's name, typically taking 5 to 10 business days to complete. To transfer a custodial account on E-Trade, several key documents are required. Prepare the child's Social Security number or equivalent, along with their birth certificate and proof of identity, such as a driver's license. First, the child's Social Security number is essential for identity verification. Second, provide the birth certificate to confirm age and citizenship. Third, include proof of identity, like a driver's license, for additional verification. For remote transfers, E-Trade now uses biometric verification to securely confirm identities. Finally, make sure all documents are valid and up to date before submitting. E-Trade conducts a thorough account review before transferring custodial funds to ensure everything is in order. First, they review for potential state taxes, such as gift taxes if annual transfers exceed $18,000. They also check for any account restrictions or state-specific limitations. Anti-money laundering checks are performed to verify compliance with financial regulations. Finally, the review confirms that all applicable regulations are met before the transfer can proceed. Upon approval, funds and assets are transferred to a new adult account in the child's name. This process takes 5 to 10 business days. In some states, custodians can retain control under UTMA if opting for a continuation. E-Trade charges no fees for standard transfers. When a custodial account transfers to the minor at age of majority, it triggers tax reporting. The custodian receives a 1099-B form for any capital gains realized during the transfer. Unlike retirement accounts, there is no 10% early withdrawal penalty when the account transfers at the age of majority. However, capital gains taxes may apply depending on the account's performance and your tax bracket. These taxes can reduce the amount ultimately transferred to the minor. Custodians cannot revoke transfers once the process begins. This ensures the funds become the child's permanent property, providing security for their future. Early transfers before the age of majority require court approval or proof of emancipation, such as through marriage or military service. This protects minors while allowing flexibility in special circumstances. Financial experts strongly recommend tax planning to minimize capital gains taxes. Holding investments longer than 1 year qualifies for lower long-term capital gains rates, potentially saving thousands in taxes. Annual reviews of custodial accounts help ensure alignment with changing state laws and personal circumstances. This proactive approach prevents surprises and optimizes the transfer timing. In summary, careful planning and professional consultation are essential for navigating custodial account transfers successfully, ensuring the best outcomes for both custodians and beneficiaries.